Okay, I want you to mark a date on your calendar. February 1st, 2026, because on that day, a massive wealth transfer is set to kick off in India, and it really presents a choice. You can either get trapped by it, or you can unlock an absolute fortune. In this breakdown, we're going to give you the playbook for being on the winning side of that transfer.
You know, right now, almost everyone in the country is completely focused on the wrong things. When the budget comes out, we all turn on the news and we're immediately consumed by questions that, honestly, don't really matter. We're thinking about small tax tweaks or whether our phones are going to get a little cheaper. But that is not where the real money is made. Not even close. See, most of us get caught in what I like to call the lollipop trap. The government might give us this tiny little tax break, maybe a few thousand rupees, and we think, great, I saved some money. But while we're distracted by that little lollipop, the truly wealthy, they're ignoring all that noise. They're asking a much, much bigger question. Where is the government about to spend billions of dollars? They're looking for the huge policy shifts that move entire industries.
So for the rest of this explainer, we're going to completely ignore the lollipops. We're going to decode the real financial game that's being played. And it all starts with understanding what I call the great misdirection. Think of the budget as a giant battleground. And on this field, there are really only two types of players. On one side, you have the saver. Their money is just sitting in a bank account, earning next to nothing, and slowly getting eaten away by inflation. On the other side, you have the investor. The investor understands the game. They position their money in the very companies that are about to get huge government contracts, the companies that are literally building the new India.
So, you're probably asking, how does this wealth transfer actually work? Well, the entire story of the 2026 budget, the whole playbook, can be boiled down to one single, incredibly powerful word: Capex.
So what in the world is Capex? Well, it's just a fancy term for the government investing money to build real things that last. We're talking about massive new highways, state-of-the-art power grids, modern factories. You get the picture. This isn't about giving away handouts. It's about building the fundamental engine of the economy for the next generation.
And the scale of this is just mind-boggling. Analysts are predicting that the Capex number for 2026 could blow past 12 lakh crore. That's not just a little wave of spending. That is a full-blown Capex tsunami about to crash onto the shores of the Indian economy.
And here is the magic of Capex. It's called the multiplier effect. See, unlike a subsidy that you spend once and it's gone, every single rupee the government invests in infrastructure creates a ripple effect. That 1 rupee goes to a private company. That company then hires people and buys raw materials. And by the time it flows through the system, that single rupee has created about 3 rupees of brand new wealth in the economy. This is literally how fortunes are built.
So, this leads us to the multi-billion-dollar question, right? Where is all this money actually going to go? Let's break down the 3 golden sectors that are perfectly positioned to ride this giant Capex tsunami. First up, defense. But wait, before you think you know this story, let me stop you right there. If you're still thinking about the old Make in India defense play, you are about to miss the real opportunity. The entire game has changed. You see, the story for the last few years was all about Make in India, basically banning imports to force our own military to buy locally. But that story is old news now. It's already priced in. The new narrative for 2026 and beyond is sell to the world. The government has set this incredibly ambitious target of 50,000 crore rupees in annual defense exports. We're not just building for ourselves anymore. The goal is to become a major global arms dealer. So on budget day, here's the key phrase you need to listen for: foreign lines of credit. This is basically India loaning money to other countries so they can turn around and buy our weapons. And the company right in the crosshairs of this policy is Hindustan Aeronautics Limited, or HAL. Why? Because their Tejas Mark 1A fighter jet is now a world-class product, and it is ready to be sold to the world.
Okay, moving on to our second sector, power and energy. Now listen closely, because this is where some of the biggest wealth of the next decade could be made. But only, and I mean only, if you understand the new problem the government is desperately trying to solve.
If you think back to last year, the big story was all about power generation. Everyone was obsessed with solar panels. But now we have a brand new problem. It's called intermittency. The sun doesn't shine at night, the wind doesn't always blow, and our power grid is getting really unstable. The challenge isn't making power anymore, it's storing it. The new narrative is all about giant grid-scale batteries.
The buzzwords you absolutely need to know is BESS. That stands for Battery Energy Storage Systems. The big expectation is that the government will announce a massive PLI scheme, That's a production-linked incentive, basically paying companies to build these giant batteries right here in India. A company like Tata Power is a perfect ecosystem play here, while IRETA, which is basically the government's green wallet for renewable projects, will be the one financing it all.
And that brings us to our third and final golden sector, the railways. But just like with the others, the real opportunity isn't where most people are looking. It's not about the fancy passenger trains. It's about building the brand new plumbing of the entire system.
The old focus was all about the passenger experience, the Vande Bharat trains, making things nicer for us. But the new focus is shifting to something far more critical for the economy, a massive modernization of freight. See, for India to become a true manufacturing powerhouse, we have to bring our logistics costs down. So the big plan is to build new economic corridors. Think of them as super highways just for goods trains.
This means the real money isn't in operating the trains, it's with the builders. We're talking about companies like RVNL, which is a key player in actually constructing the railway lines, and Titagar Rail Systems, which is a huge manufacturer of the wagons that will run on these new tracks. They are the direct beneficiaries of this huge infrastructure push.
All right, so we've covered the exciting parts, the huge opportunities where all this money is flowing. But it is just as important, maybe even more important, to understand the risks. Because there are two potential silent killers lurking in this budget that could absolutely wipe out your gains if you're not paying attention.
And I'm serious here. You could pick the perfect sectors, the perfect stocks, do everything right, and still lose everything if you're not aware of these two hidden threats. The first potential killer is a change to the capital gains tax. I mean, think about it. To fund all this massive spending, where's the government going to get the money? There's a real possibility they can increase the tax you pay on your stock market profits. And even a tiny hike could cause a big, even if it's short-term, drop in the market right after the budget is announced.
The second killer is something I call the FD trap. The government wants your money to be working in the economy, building things, not just sitting idle in a bank. So they could easily tighten the rules around fixed deposits or debt funds, making them way less attractive. This would essentially push savers out of so-called safe assets and into the stock markets, whether they're ready for it or not.
So, with all of this information, the incredible opportunities and these silent threats, how do you actually put it all to use? Well, let's pull it all together into a simple, actionable checklist that you can use on budget day itself.
Here it is, your game plan. Forget all the noise from the news anchors. On February 1st, you are looking for just 3 signals. Signal 1. Do they announce new credit lines for defense exports? If yes, that's a huge green light for companies like HAL. Signal 2. Is there dedicated money, a PLI scheme, for battery storage? If yes, that's the trigger for the entire power and energy storage space. And finally, Signal 3. What is the final Capex number? If it's growing by strong double digits, that's a massive tailwind for all infrastructure and railway companies.
At the end of the day, that's what Budget 2026 really is. It is a historic wealth transfer event. Money is being actively moved from the accounts of passive savers into the pockets of active investors. So the only question that really matters is, which side of that transfer are you going to be on?